Good morning. So we are going to get started. My name is Helen Weber. I am the Director of Nonprofit Services at HW&Co, and I welcome you to our virtual nonprofit guide to success. Our next topic is by two of my colleagues at HW&Co, who, in addition to their other areas of expertise, have quickly become experts in advising businesses and organizations in the accounting and reporting issues with COVID-related funds. So here to share all that they know are Jim Horkey and Tony Lanazza.
Hi, this is Jim Horkey. I'm here in actually sunny Columbus, Ohio, with my partner Tony Lanazza, heads up our office down here. And we've been following, the government-related relief funds, primarily the Payroll Protection Program. That's the big one, but there's others as well we're going to touch on. Really since March. It's been a long process. The rules and programs have been constantly changing and continue to change. So with that, we've only got 50 minutes, so we're gonna get started. Tony, you want to kick it off?
Yeah. So I know Helen went through a lot of the housekeeping already. I just want to mention you can provide some questions in the go-to meeting box that you have on your screen. If you do have questions that come up, we'll try to answer any of those that come through. And then, there is good resources on HW&Co's website, and there's articles posted very regularly, so probably, at least once a week on different relief and other items that we post out that we think is important to our clients. So, take a look at that, and hopefully you're on our e-blast and all that we e-blast out on certain information as well. So agenda is, we're going to spend probably half the time on the PPP, Paycheck Protection Program, some updates and some strategies on that. If you've been at our previous webinars, some of it is going to be, you'll probably already seen some of that information, but there is updates to this information that has come through. So we'll try to update everyone on that. We're going to go through some other relief options for nonprofits that at this point are out there or have been out there. So hopefully some of the nonprofits on the line here have taken advantage of that. We're going to talk through the accounting related to the relief, somewhat complex related to the accounting side of it. And then just at the end, some takeaways at the end. So quickly, just on some history of the PPP, you can see obviously the different metrics and so forth in the first two rounds. There hasn't been much information that came out with the interim final rules or the FAQs. Last information that came out was really in August, so it's probably been a month and a half or so. So really no new information other than maybe some articles and things that we've read from different financial institutions and establishments that I wouldn't say clarify information, but provide a little bit more guidance. So again, not much true new information out there. Some of the recent information, I know a couple of weeks ago, maybe even a month ago, there was information that came out that Congress was trying to pass have some approvals related to the certain levels of loans and what requirement there would be with loan forgiveness. And you can see the levels here. Now this has not been passed at this point. It's still sort of in Congress, and I know there is something that is trying to go through Congress right now related to another relief act, potentially where they may throw this into, but there's nothing really out there right now that actually has approval of these different requirements for loan amounts. So at this point, truly, the key is if you do have a loan over $2 million, there is going to be definitely more scrutiny over that with the Treasury. So certainly for borrowers over $2 million, you have to make sure your ducks in a row with that. Just with banks and lenders and things and what they're trying to do, what I've heard is, banks right now, and I might be stepping on Jim's toes here a little bit, but banks right now are they're allowing right now applications for 8-week periods, covered periods, and really not anything else. So at this point, if you're going to have more than an 8-week period, from what we know, we don't think there's going to be right now any, anything where you can actually apply for the loan forgiveness. But Jim wants to mention something. Did you want to mention something?
Well, it's kind of my understanding that the application processes have started, and to some extent, they've been passed on from banks to the U.S. Treasury, who've done nothing with them. And the Treasury did come out and say that they're going to start processing forgiveness applications, but I'll get into a little bit more detail on the numbers.
Okay.
A couple of slides down.
And then there is some tools out there on the AICPA website. The first tool would be like an Excel that you can actually pull down and, track all of the expenses, qualifying expenses. And then there's also a tool that's a cloud-based tool where if you're using just one file, then it would be actually, it would be free for the borrowers. But it's a cloud-based, you actually have to log in and, create a login and so forth is related to that as well. So it might be a little bit more than you really need. But if you do need some resources, the AICPA is probably a good spot to start with. The first polling question we have here, and the question is, has your bank contacted you about their process for taking loan forgiveness applications? We'll give it like 20 seconds or so for those that need CPE, and make sure that you answer the questions here. If you're in full screen mode, please get out of full screen mode so you can answer those questions.
And then I don't know, Tony, if you can see the results, but they are 56% say no and 44% said yes.
Okay. Yeah, I think that's pretty expected. Probably half banks hopefully have either contacted you and said, hey, we're not ready yet, or potentially they are ready, but maybe just for certain loans at this point. So, or maybe some of you have already applied, and if you have, hopefully that was somewhat of an easy process. Jim?
So, one of the questions we get probably at some level in the firm on a multi-daily level is, what should I be doing now? I've received this money, we've spent the money, and to some extent, if you were able to use the money in 8 weeks, and some of our clients were, you can apply for forgiveness if your bank is really ready. We've, for the most part, been kind of guiding our clients to not do that in general, because most of our clients made the decision to not use the 8-week period, but to instead use the 24-week period. So in other words, you had 24 weeks to spend the money, and if you could, that made it a lot easier to spend all of the money, not just the 60% requirement, but all of the money on payroll, which simplifies the record keeping quite a bit. So if you were able to do that, you can't really apply yet because some of the detail that you have to provide, including your IRS 941 payroll reporting for the third quarter, doesn't exist yet because it's not prepared until October. So that's one of the reasons to not apply just yet. The other is, we just don't think we think while the banks are taking the applications, we don't really think they're quite ready. And I hate to be the first one that is going to generate a lot of kickbacks of missing information.
And I just read an article today that the Treasury plans to start reviewing applications this week.
That's what they said.
And they said that though the loan's less than $2 million, it's going to be a quick process, quick approval process. We're getting there's a lot of politicians out there right now saying this is so easy, it takes 20 minutes. It's just not true. Even the easy application, which now I'm probably stepping on Tony's part later, but
the easy application might be easy to fill out, but when you look at the additional information that you have to provide with it, I think a medium-sized company is going to take them multiple days to gather that information. You know, if you've been gathering it, it may still take you quite a bit of time to kind of do some reconciling, making sure that you're providing the right info.
And then just quickly on this slide, you know, the phase 2 side, I know people probably on this line have read, you know, information about that. You know, right now it's still kind of in Congress, this kind of phase 2 of PPP or relief, and, you know, it's in the House and right now, and they're trying to figure that out. And now the funding amount was, you know, $3.5 trillion. Now it's down to, you know, a little over $2 trillion. So they're still trying to figure that out. It's fine. So nothing has really come through as far as anything through the House or the Senate. But now, is it going to happen before the election? Who knows at this point?
And then once you've filed your application, you know, are you going to get audited? What's going to happen next? You know, first off, one of the things that we feel pretty comfortable they're trying to get through Congress, that there's bipartisan support, is that ultimately it may just be that if you're under a $150,000 loan, it may just be automatically forgiven. You may only be subject to like a fraud review, and there's a lot of fraud out there on these loans, with what we've been reading. However, for the larger loans, if you're $2 million or more, you are going to be, I don't know if I would call it an audit, but your support is going to be reviewed. And nobody really knows what they're going to do, but, you know, what we think is their focus is going to be on a number of things. You know, if you look at this process, step one is you had to spend the money. Now, you know, so they may look and say, hey, did you spend the money? You know, they may also look at your original application and how the amount you received was calculated, and do a comparison of what maybe you should have received versus what you you know, actually did receive based on a review of your support for the original application. So we really don't know that. That's just what we think. Then ultimately, the biggest, you know, the thing that really, once you're past spending the money, then there's two other things that come into play. The one we think is going to be very uncommon is that if you cut employee or management salaries by more than 25%, that cuts into your amount that can be forgiven. However, we think that's going to be a fairly rare occurrence, that any company or not-for-profit would have cut individual, you know, wages, you know, hourly wages or salaries by more than, you know, 25% based on how long on the hours you work. So the second one is, did you cut your level of staffing? And ultimately, there's a number of outs on that. If you did cut your staffing, which, you know, but you were still able to spend the money in the 24 weeks, but with less staff, if you can assert that you either couldn't rehire people because they didn't want to come back, and certainly in some of the industries that we specialize in, we saw that as a very common occurrence, or if, you know, due to, you know, the various, you know, government, you know, regulations that came out that said you couldn't open. The most common one is a restaurant, you just couldn't open. So how could you bring back your 20-person wait staff? So if you can attest to those two items, you're not going to have forgiveness, but we feel that could be an item that's looked at as well. And that's even on if you do an easy application or a regular application, that's all information that you have to hold on to, subject to audit. And finally, just the sheer volume, you know, if you're over 2 million, you're going to get audited. If you're under, you are subject to review, but keep in mind there were 5.2 million loans made by, you know, 5,400 different lenders. Just the sheer volume of this is going to make the odds of a review for a loan under $2 million, I think, you know, fairly rare.
And then, with the loan reviews, you can see just the appeal process here. So after this could be way down the line as well, with all of the applications coming in. The SBA is probably going to be overwhelmed. At this point, they're saying it's going to be a quick process, but I'm not sure if we're believing in that. So, the appeal process this is kind of like the flow of the appeal process. If you don't agree with SBA's decision, so this would be what you would go through related to that. Everything's going to be the notification process is all in writing. And it's going to be going from the lender. So it's from the SBA to the lender to you for the borrower. So, and then you obviously, like everything else coming from government agencies, there's always deadlines with them, either 30 days or 45 days and things like that. So just so everyone knows what everyone has to go through there. So just with some of the details here and the timeline here, you can see, from the start of receiving the loan, you have the 8-week or the 24-week covered period or some period in between there that you're going to use. You have 10 months of the maximum amount of time where then after the 10 months from your covered period, you'll have to start making payments of principal and interest on your loan. And then in the midst of that, you submit your loan forgiveness application. The lender has 60 days to get back to you on a response on questions, and I'm sure the lenders will have probably questions. And then once the lender moves that up to the SBA has 90 days to remit forgiveness and a decision on that forgiveness. And then again, back to that appeal process. Once that decision is made, the lender will respond to the borrower, to you, let you know what the decision was, and then you have an appeal, process there at that point if you do want to appeal it. Some of the terms, I think everyone on the line here knows kind of, it originally was 2 years, and then they made all these changes back in June, and they increased the loans to 5 years. Now, most of the loans prior to June 5th have that 2-year maturity prior to the changes that were made by the Treasury. So again, if any of your loans do not get forgiven and you do want to increase that loan period to 5 years, you probably would have to obviously talk to your lender to amend your promissory note of that loan. Interest was not changed at 1%. And then, the covered period, as we talked about, 8 weeks or 24 weeks, even any time in between that as well. As Jim said, the easy form, he mentioned some of the criteria as well on the easy form. It's a 3-page form, and it's a 2-page form. and they, you have to meet certain criteria on this, and this is the criteria. So if you have no employees, you file the easy form, you're done. And then the other criteria, as Jim was saying, it's the 25% or more, the salary change, as well as, you had, some issues related to not working at the same level as prior to the pandemic because of the compliance issues and things like that. So you have to make sure that you meet one of these criteria to use this easy form. And if you do use the easy form and you don't meet one of these criteria, I'm sure the lender will be asking you, that'll be one of the first questions they'll be asking you if you do use the wrong form. Any comments on that, Jim?
No, the form itself, it is an easy form. I concur with our politician friends in the government that it's an easy form. But when you look at the instructions, there's the first 2 items under the instructions is all the documentation you have to provide with it. I'm not going to read it all off, but they're looking for canceled checks. They're looking for third-party payroll service reports. They want 941. They want to see state quarterly and individual, reports for your various state taxes. There's just a lot of information that really the majority of it won't even tie into your calc. It's just really proving that you really exist. And then when you get into the non-payroll, if you were not able to use everything for payroll, let's say you use part of it to pay for your lease, you have to provide a copy of the lease. And they want you to, for mortgage interest, they want to see canceled checks. So it's a lot of information that's required, and it's required to be submitted. And I think one of the things that the banks will do well is they're going to have a portal, and there's going to be a checklist, or there's going to be an item for each of these items in the portal. And if you don't have one of them, it's just not going to work. You're going to get rejected.
Okay. So if you don't meet one of the criteria for the EZ form, then you would have to do the full form. And this is just some information about the full form here. Now, the first couple, the calculation form, the Schedule A, must be submitted to the lender. The other forms don't have to be. There's some questions on page 1 of the application. That it just kind of asks questions. It says, employees at time of loan application, employees at time of forgiveness application. We think that's a head count. That's not an FTE count, especially if you use a head count for your application, an original application. Ask for payroll schedules, ask for what cover period you're going to use. Ask for check the box if you have a loan over $2 million, then that includes affiliates. So if you applied for several loans, but they're considered affiliates, and in summation they're over $2 million, you have to check that box. And obviously we all know why at this point. So again, if you're using the full form, a lot more information to include in there, and probably a lot more questions maybe the lender will have. Next is the next polling question. Do you anticipate your payroll servicer to provide customized FTE payroll reporting for the loan forgiveness? We've been hearing some of the major payroll servicers, customizing reporting for their clients related to this. I'm not sure at this point, how far along they are, or if they're complete at this point, but go ahead and answer it for CPE purposes.
So we have some answers now. Half the people said yes, 15% are no, and the remainder, which is about 35%, are not sure yet.
Okay. Well, if you can get that reporting, that's great. Obviously, as I said, the AICPA has some resources you can use. It's really just an Excel spreadsheet. You'll have to pull all that information directly from your payroll system. Hopefully there's an easy process with that, exporting data. But if you do have a lot of employees, this can be very, very time consuming, because you have to really have all this information related to employees by employee, hours by week, salaries by week, by pay period. So there's a lot of information to include. And, especially with loans over $2 million, you're going to have all the information ready to be reviewed by the SBA. Then, quickly, I know Jim talked about some of the reductions of the qualifying costs, and we alluded to this already. The first one is the salary hourly wage reduction. As Jim mentioned, the 25% or more of the reduction of a single employee's salary or hourly wage rate. One of the things you do is there is safe harbors included, so you have to review this. So if you do have an issue with this, I think it's sort of hard to have this issue, as Jim was saying. But if you do have this issue, there is safe harbors that you can apply, and you can see the information here where you're comparing to different periods, prior to the pandemic, as well as when you're applying for loan forgiveness. If you increase that salary or hourly wage rate back to where it was, then you won't have any issues. That's considered a safe harbor for that employee then. And then the second one is FTEs. So you can see how you calculate the FTEs. which is anyone over 40 hours or more is one FTE, and then anyone under the 40 hours is less than the one. You can use as a simplified method, you can use just 0.5 for all of your employees less than 40 hours. But what you do is you compare your FTE covered period calculation to the lower of the February 15, 19 through June 30, 19 period, or January 1, 20 through January 29, 20 period. The lower of that, then it gets compared to your covered period FTE calculation. If you have a reduction of FTEs, then you may have a reduction potentially of the qualifying costs. Again, with this as well, there's safe harbors as well. It's very similar to the safe harbors for the salary and hourly wage reductions. I'm not going to go through them very in detail, but the one is if you do bring back your FTEs to the same level as prior to the pandemic, on the day that you apply for the actual loan forgiveness, and that would be considered a safe harbor, and you would not have any issues with reductions. Also, there's exceptions as well, where if someone left voluntarily, if you had someone leave and they now do not want to come back, again, those are exceptions to the calculation where you would pull out those FTEs for the prior period as well as the covered period as well. That would not have any issues with reduction for that.
And that may be one of the hardest parts to document, because early on you didn't know you had to document that. So we're expecting that to cause some probably more of the stress when you're going through the process of forgiveness if you did reduce your staffing.
Yep. And then, moving past the actual loan forgiveness piece and the complexity of that, Jim talked about some of the documentation. This is just some narrative here related to that. Probably no surprise to everyone. I'm sure you've seen this. The actual calculations and the forgiveness applications, and then everything related to the payroll that you're going to be submitting for qualifying costs, FTE calculations, and then if you do have any non-payroll expenses that you're going to be qualifying into the loan forgiveness, then you have to include a lot of that support as well. This may change potentially with some of the Congress and some of the requirements, but at this point right now, I would just maintain all the support and be ready for lenders and potentially at the SBA asking for that support. The next polling question: do you anticipate reductions related to salary, wage rate, and or FTEs?
And we have our answers. 53% said no, 22% said yes, and 25% said maybe.
Okay. Yeah, for those that said yes or maybe, we'll talk about some of the strategies that you may want to think about and consider as far as the reduction. One of the key things is the reduction on these amounts come off the qualifying costs. So the longer period you have and the more qualifying costs you have, then potentially you still could get full loan forgiveness. Say if you had $1 million loan, you have $2 million of qualifying costs. However, you have a 50% reduction in FTEs, you still get back to that 1 million loan figure. So even in that scenario, you would not have a reduction of loan forgiveness. So we're going to spend a few minutes on this. Jim's going to go through the first couple here.
Well, we really already talked about, when and should I be applying. There's a lot of hypothetical scenarios of should I apply or shouldn't I. And it usually comes down to, we've spent the money, we're in the middle of our 24-week period to have spent the money, and we have issues with staff reduction. Generally, we're advising most of our clients that the majority of the benefits, are going to lean more toward going all the way through your 24-week period and then applying. You agree, Tony?
Yeah, and I think you actually, on the actual application, you actually have to select either 8 weeks or 24 weeks. However, you can use...
You can apply early, but really the benefits, without getting into too much detail, is to just take it all the way out to the 24 weeks. It's going to give you a better chance of achieving 100% forgiveness without really any benefit to doing it early.
Right. And one of the things too, as you think about it too, the SBA right now have 100,000 applications to review.
Out of 5.2 million that are coming.
So they may spend a little bit more time with the first few that they get right now. That's just my opinion. Like maybe they scrutinize a little bit more over those potentially, rather than when they have 2.5 million in the queue and they have a couple hundred people reviewing them. How much scrutiny are those going to take, especially the ones that are less than 2 million? So I don't know, just something to consider.
The other thing, and I know this is a not-for-profit seminar, but your friends that are for-profit, one of the big issues, and it could even impact you, is that if you have unrelated business income and do pay tax, unlikely, but the big unknown right now is, will you be able to take a tax deduction if you're a for-profit company, for the expenses you paid with forgiven monies? And some companies want this forgiveness to happen next year. They don't want it to happen this year from kind of a tax planning strategy, as well as maybe from an accounting strategy. You're going to how you want to present your financial statements and footnote this, and Tony's going to talk about that. Maybe you really want this forgiveness to have been applied for before you close your year. Maybe you want it in next year for other reasons. There's so many scenarios, you just can't get into them all.
All right, and then the next slide here, the one key item that just came out, I'd say maybe 2 weeks ago, was if you do use less than a 24-week period, you actually have to prorate the maximum caps of the compensation. So, you think about to the instructions, the maximum compensation is $100,000, and they have limits on those. They also have limits on owner compensation. Well, that's based on 24 weeks, those max. So if you use 16 weeks, you actually have to prorate that to 16 weeks, and it's not going to be the full amount of, I think the 100,000 with non-owners is 46,154. Well, you'd have to reduce that to the 16-week prorated amount, not the 24-week amount. And you can read the other stuff here. We kind of alluded to all of this already. The payroll costs. What do you use? Can you use incurred and things? What we've read is in the beginning of the period, you can use when you paid the actual payroll. So if you had your loan funding on May 15th, and you had a pay period that you actually paid on May 16th. However, if that May 16th pay was prior to the actual cover period, but you paid it in the cover period, you actually can include that in your payroll costs. But you may have to prorate the back end of it if you are going up to your 24 weeks and you have a pay period that's going beyond the 24 weeks. Now, if you're just going to use 16, 17, 18 weeks, I would just use the full last pay and cut it off there. But if you need to use the full 24 weeks, potentially you may have to prorate that last pay period.
For whatever reason, I like the idea of submitting an application with the most cost as possible. That we far exceeded spending the required amount.
Yeah, it's optics, right? It looks better, right? It looks better.
I agree.
So, again, talking about the payroll costs there, the vision, if you are going to use the non-compensation payroll, which is like the group health and the retirement benefits, The vision and dental benefits can be included. That came out as a clarifying item back in August. Jim, I think, are you going through utilities?
Well, there's more and more guidance on what counts as utilities, but it's pretty much general. I believe for transportation, something recently came out better defining that. So if you're going to, we think most of our clients are not going to use, they're going to be able to use mostly wages. And after wages, maybe they would use rent. And then should you submit all these costs too, if you're well over the spend requirements? We think not, because it's just going to be an administrative headache to gather all the details. But if you need them, then you really go on to reach out to us or go on the U.S. Treasury website. They've gotten expanded definitions for what counts as all these utilities. The one that you really should look at is transportation. That's the one that's been changing a little bit.
And then the ownership doesn't really, doesn't apply to nonprofits. These caps don't apply to nonprofits. Now the cap is $100,000. Remember that for compensation overall. The rent payments, if you have a related party you're paying rent to, there has to be a mortgage on that property to include that rent payment, and it's only up to the actual mortgage interest paid. So that limits that as well. If there's a related party lease agreement between the borrower and the related party. Bonuses can be included, hazard pay, we knew about that. A lot of this stuff isn't really new. We just wanted to include it just so for those that have not been through some of the webinars previously. Jim mentioned the 60% that has to be paid, that has to be used for payroll itself. So make sure you're hitting that. I don't see any really major issues with that for most businesses. Jim alluded to, this is the one, the second question here is important for nonprofits, because what they're saying here is if you have other federal grants and you're reporting on expenses for those other federal grants, you can't use those same expenses for PPP. So you can't, what they call it, you can't double dip into these federal grants. So make sure that you're tracking these costs and you're using only these costs once for federal programs. You can't prepay costs. That's pretty no changes there. So nothing crazy there. And then the last item here, the Social Security taxes. This originally PPP borrowers were not able to participate in that, but now you can. It's through the end of the year, December 31, 2020. So what that is deferring the employer portion of the Social Security taxes and paying it, half of it by the end of 2021 and the other half by the end of 2022. So at this point, businesses can participate in that. Next question is, do you expect to use the full 24 weeks forgiveness or a time period prior to the end of the 24 weeks?
Okay. The 69% who answered said they're going to take the full 24 weeks, and while the rest, the 31% who answered, said they're going to file or use the time period prior to the 24 weeks.
Okay. Thanks, Helen. So moving into other relief, the first one, it's really similar to the SBA. The PPP, if you go on the website, it provides information about the EIDL, which is the Economic Injury Disaster Loans. Prior to probably about a month ago or so, or even longer, there was a grant item related to this EIDL, which was up to $10,000. That's no longer available now, that grant, but the loan side of it is. So you can see, favorable terms that you can use, things like that related to this potentially, if there's a need to have additional funding for you through the SBA.
There's a employee retention credit out there for, the big limitation is it doesn't apply to companies that did not receive a payroll protection program loan. So if you didn't receive one of those loans and you have payroll, then there is a credit to the extent you were able to still maintain employee counts. There's also a payroll tax deferment program.
I mentioned that.
And you already did mention it, but for the most part, we don't really see a huge benefit to that unless you can't pay your payroll taxes. At least you're saving the penalties. But other than that, it's a very small benefit. You've probably heard a lot about the Main Street lending programs, and that's really a pure lending program that not-for-profits are certainly eligible for. But these are, we're not seeing a lot of companies yet going after these loans, though we think some will. They're highly regulated. They're real loans. You have to be eligible based on, a number of items, but it's also ability to repay is one of them. And then, there's a lot of restrictions on how you do use the money. You can get a loan as small as $250,000 and as large as $35 million. So we're expecting to see some activity there, but that is remains to be seen. Then, for not-for-profits that are involved in, healthcare, there certainly are a number of funds, Tony.
Yeah, there's the Provider Relief Funds, Ohio Coronavirus Relief Funds, the HHS, and the Treasury. There's a resource in the handouts and the GoToWebinar. It's a matrix for healthcare entities, and it provides all the relief funding and what type of organizations can apply for it. Now, some of it is over and done with at this point, but some of it isn't. So take a look at that, and if you do have an HW contact and you feel you may be able to participate, you may want to talk to them.
And then there's an overwhelming number of state, local, private grants. Just there's any number of places on the internet where you can get, list of these programs and due dates and how to apply. I happen to use OhioGrantWatch.com, and everything from cities to counties to state programs. Many of the programs have already passed deadlines for applying, but many of them, the deadlines run through the end of the year, or they run based on the amount of funds that are available.
And then, moving away from just the complexities of all the relief, just moving into the accounting. We have about 5 minutes here. I'll spend a few minutes on the accounting and then talk about single audit requirements. But really, the PPP loan has several options. At this point, what we're seeing clients are mainly doing, especially the 6/30 year ends right now that we're doing work for. They're including it as a note payable on the books because there is some uncertainty and so forth, and maybe they're not complete with the calculations and their cover period still moving at this point. So we're seeing more just recording it as a note payable and then leaving it on the books until you really apply for loan forgiveness, have some certainty at that point, and potentially then have an approval from the SBA, which could be a long period. But there are other options here. There's an international standard that you could use potentially. You can read on that. There's a FASB model standard, which Asim and Dan actually went through last. That's the 958-605, and it relates to the grants and contribution model. You have to kind of follow that model, and if there's barriers to to the grants, and some of those barriers could be essentially having some reductions of FTEs and salaries in your calculations. So you'll have to kind of consider all of that if you're going to use that model as well. And then, with the provider relief funds, more on the healthcare side, you can see, for the most part, it's considered a grant. I wouldn't even say it's for the most part. It's considered a grant. So again, you're following the 958-605 model. And once you incur those costs, then, really then that's when you actually meet those conditions. And they have to be obviously qualifying costs under the terms and conditions of the agreement. So make sure that you're either, if you are qualifying those costs and incurring them, you can at that point then bring it into income. But anything left over then as of month end or year end, you would have still on your balance sheet as a refundable advance. Some of our clients receive the Medicare accelerated advance payments. For the most part at this point, you include it on the balance sheet as a liability until you actually provide those services and you bill for those services on the Medicare side. Once you do that, then you can actually bring that into income. Okay, so then some other takeaways. On the single audit requirement side, you can see the different relief funding between the PPP and everything else. There's a resource in the handouts in the GoToWebinar that there's a nice little matrix that goes through all of the different federal funding, and if it does meet single audit requirements and if it doesn't. For the most part, most of the relief does, other than the PPP and then that EIDL advance amount up to $10,000. So, if you have not had government funding before, federal funding, or have not had a single audit requirements previously, you'll have to really make sure what you're tracking those costs and so forth. The threshold is $750,000, and it's expended funds. So, say you got provider relief funds of $500,000, and you got the Ohio coronavirus relief funds of $300,000. Potentially, that could put you over the 750 threshold, and you may have a single audit requirement. So again, something that you want to talk to your HW representative on. But if you do feel that you do have a requirement here and you have not gone through a single audit before, this is some of the items that you'll want to discuss internally right now as far as procedures, internal controls on those procedures, how you're tracking the expenses, and so forth. Because the federal funding and the requirements for under single audit is higher than potentially other requirements under just audit requirements. So again, you'll have to make sure that you're talking to HW representatives on that, just to make sure you're doing the right thing. Okay, well then quickly on this, really, I know this was really high news in August. It's the employee portion of the payroll tax, and I think at this point, with discussions with clients, they have not done this. It's still out there. They try to clarify. The IRS tried to clarify some of this with the IRS or from the IRS release, but again, if you do have questions on this, or if you have employees questioning, then talk to your HW representative on that.
Really now as we kind of wrap this up, the kind of one thing to keep in mind is, well, what's coming in the future? And that's a big unknown, but I think we're going to find out pretty quickly. There's a couple things to keep in mind. There's $130+ billion from the CARES Act and the PPP loan money that was not used, and there's certainly some bipartisan support for how that should be used, targeting specific industries like the airline industries, other industries that are more hurt than others. And then there's multi-trillion-dollar packages that are being proposed as we speak And it seems the consensus is we're going to find out today or tomorrow if a bill can be put together now. Otherwise, it's going to be after November 3rd election. And we'll be watching the news quite closely later today and tomorrow, as will a lot of people, including the stock markets and everything else.
Is that it? All right. Well, thanks everyone. Appreciate all your time. Hopefully we answered some of your questions. If you do have other questions, let us know. Let either your representative at HW&Co know, or you can go directly to us and email us or give us a call. Thank you.